How wide should iron condors be? How wide, Tony Batista?
About this wide. About this wide. It's got to fit in between there.
So how wide should our iron condors be? And the answer we're going to find out. Let's do it. Iron condors are one of the most popular strategies for new traders and smaller account sizes. However, one question many people ask is, how wide should they be? Because the regular iron condors, the risk rewards are tough, but we got to make something happen here. So how do you make something happen with iron condors? Well, in today's segment, we're going to explore the optimal width for different underlyings. And by adjusting the wingspan of iron condors, traders can optimize their risk-reward balance and improve profitability. Smaller wings might not receive enough credit, while larger wings may be too expensive to trade with a lower return on capital. We looked at 5 underlyings of different prices: $100 stock, $200 stock, $300, $400, and $500 stock, all with similar IVs. Okay, so we did the Qs, Microsoft, Visa, which we don't look at very often, IWM, and XBI. And again, we did this because we wanted to cover each price range. Okay. We calculated the average P&L, the return on capital used for different wings. And then all the trades were done at 45 days to expiration, and 16 Delta short strikes managed at 21 DT. Over 1,000 trials were recorded for 12 years of study, 2013 to 2025. All right?
Yep.
We're going the whole gauntlet with you. How wide should it be? So for a $500 underlying like the Qs, the $5 wide wings did not have a positive return on capital, while every other width did. It's pretty interesting.
Because it is pretty interesting, because I would have thought it would even have to be wider than that. On a $500 underline, I would say, the $20, $30, $50 wide iron condor would have been where you would have to go.
This is really telling. And you know why? Because there's no way I would have got any of these numbers right.
Agreed. I know I wouldn't.
I mean, the $5 wide wing, that's crazy to me. Which one of these is optimal? I don't know the answer. I really don't. But what I do know is no more $5 wide wings in the Qs.
Yeah, that's right. Because when you talk about, $500 stocks, you're looking at the Qs, $500, right? I mean, I know it's an ETF, which is.
Yeah. All right. So for a $400 underlying, such as Microsoft, the majority of the return on capitals were positive. The best return on capital was the $25 wings. So again, even in a $400 stock like Microsoft, the $5 wide wings were not profitable. And when you look at this thing, you're like, well, you just can't go narrow in these iron condors.
We've been saying this for a long time. I don't know if we've come to the $5 conclusion like this, but we've been saying this for a long time. Tight iron condors, and that's the quandary in a smaller account. You have to have a tight iron condor. It kind of opens you up to, a hard road to profitability.
So here's a $300 underlying, and again, the $5 wide wings, no bueno. 10, 15, 20, all worked. $5, no. But the $20 wings, which has been the case across the board, this seemed to be the best, the proven winner across the board.
Yeah, it even goes to the 0 days from our research, that $20, even $30 wide iron condor playing these 0 day options. That seems to be the best bang for your buck, also from our research, at least.
Yeah. Let's go to the $200. And in the $200 stock, the $5 wide wings, which is IWM, it didn't work either.
Right.
And the $15 wide wings were the best. But basically 15, 20, which this is it's kind of an indictment on like everything that everybody talks about and teaches with iron condors. You kind of got to get wide. Otherwise, you can't do them.
Yep. You got to get a wide stance in football. You got to get a wider stance in baseball. You need stability, Sadnov. You got to go wider. That's why you're two little pin legs. You like to go naked because you don't have that wide stance. You can't grip the ground.
Got him. I'm so happy you explained that to me.
You're welcome. NASDAQ up 11, big boy.
Let's go to the next slide. In the $100 stock, the $5 wide wings didn't work either. So There's no $5 wide wings anymore.
Yeah.
This
No
is
$5. That's it. $5 gone. So those people who do our write-ins and stuff like that, don't be calling no $5 iron condors. I don't want to hear it anymore.
Don't be calling in. In this case, the lower priced, the $10 wide wing was the best, but still.
Yep.
So some of the takeaways here. And this is kind of super interesting. So the results from the study show that in order to achieve a larger return on used capital and average P&L for higher price underlyings, you need to widen your strikes. The amount by which the average P&L goes up per $5 change in width decreases after the wing width sweet spot is hit for that underlying. However, if the underlying is low priced, it may be difficult to be consistent using the wider winged iron condors due to the buying power and less return on capital. So for smaller accounts, stick to the narrower wings like $10 wide. For a general guideline, iron condor wings should be between 10 and 30, increasing in $5 increments for every $100 increase in price. That's pretty good.
That is pretty good.
However, you may adjust those for your own risk reward strategies as long as the potential return on capital and P&L remain in check. So basically what the research team did, because we've never done this before, is they've essentially said, okay, so for every $100 in price, raise, so a $100 stock, go $10 wide. $200 stock, go 15. A $300 stock, go 20. A $400 stock, go 25. And a $500 stock, go 30.
Yeah, I got it. Makes sense. And we've discussed similar plays like that, expanding more like
no, we never made it that mechanical.
No, we went $300 stocks, $30 wide. We didn't do it quite as well. It's quite a good job. $200 stock, $20 wide, $400 stock, $40 wide, kind of making stocks out of iron condors out of play for smaller stocks on the larger stocks. I like the way they've done here by going up by $5 increments. It works out nicely. Even the S&P is up 20, NASDAQ up 13, Russell up 24, the Dow up 260, volatility in by 54 cents. Sadov, I got an email here that Square is now XYZ already. So we can't say, hey, you trade stock XYZ anymore, because now there is a stock XYZ. Do you believe it?
Kind of interesting that they did that.